Hey everybody, Double P here and welcome. So in today's trading session, which is October the 14th, it's roughly around 2:30 in the afternoon Eastern Standard Time. So let's go over the usual stuff right here. You'll see here full account right here. And obviously I got to blur out my data so I don't violate the terms and services of my brokerage agreement. Everything is in real time here, so stock is in real time. So New York Stock Exchange, Amex, and NASDAQ, all real time right there. And then you see the equity futures and futures options. I don't trade futures right now. I'll wrap my head around it later, so I don't need the feeds for it. So that's all delayed. Forex and everything is all in real time there so that you see it as full account. So today, what happened is, I guess what you can say is I violated my own rules, hence that's why today is a red day. So today we're going to be going over a loss. We're in the red, and let me get that out of the way. So most of you probably going to be wondering, well, how much did you lose? So here we go right here. QQQ, I took the October 15, 21, 366 puts, and I lost 580 bucks, 83 minus 83.18% on that option drop. So that was the first loss, and as you can see that right up there, you can see it on the left hand side. But let me go over the second loss for you. And this one was a big one. This one didn't feel too good. This is Citigroup. I bought the October 15 21s, $70 puts, and I'm down 21.20, so $2,120. And you see that right there. That's what I'm down now. Let's get into the lesson for today. The lesson for today literally is. Well, I drew up my box. First of all, I drew up my box. Let's come over here. So we can come over here so you can see everything a little bit more clearly. So let's go over it. Let's change this 1 minute and let's go to the 5-minute chart. So as you can see right here, let's open that up. So what happened with Citigroup? Well, I drew two boxes today because the close was a little bit wonky yesterday and my box was out of proportion yesterday. But this is pre-market. You see all this stuff right here. This is the high. So look at what happens here. When this opened up above the box, but it opened up red. So when the candles open up red with such velocity, this is why I got caught in this particular trade. This was a high over here. It hit the high out here. But when the bell actually rang and it opened up, you can see here the velocity of the drop, right? And then this is the box. It opened up way above the box. So first lesson. If the candle opens up way above the box and it's very high and it opens up with such velocity that the colors are red, the candles are red, this should have been a short all day long, which it was. So that's why I got the put. But it never hit my 70 strike for my put, right? That's why I marked it out here. This was the low. What happened was, well, right here, I didn't take the trade because it was inside the box right here for the first 5, 10, 15, 20 minutes or so, 15 minutes or so, and I didn't want to take the trade because of where it was, right? And then what happened was when I actually did take the trade, I got trapped. Basically, here's where I got trapped. I waited for this to blow through the box on the top, Then I entered my position right here in this position right here, which if you're watching my videos, you always know this is the box. Never trade in that box because you're going to get trapped all day long in that box. And that's exactly what happened to me. I violated my own rule. And when I violated my own rule, this is what happened, right? Outside of the box, outside of the box, outside of the box to the upside. It never really busted through. It never really busted through below the box from my 70 put strike. Maybe once here, but that was literally nothing on a 5-minute candle and a 1-minute candle, right? So you see it right here. I got trapped, and every time it kept marching up, I was losing more and more and more and more money. And I figured after it breached this area, that was the 50% retracement on the Fibonacci, that it would revert back down because it was negative and positive all day long. It was just bouncing back and forward. And when it broke 61, that pretty much was it for me. I was out after it broke the 61. I just, you know what I mean? That was too much pressure. And that was all day long. This pressure was going all day long. So I got trapped in a very long trade. And I should have never took this trade. But it looked like it was going to be a really great trade because look at these fat bars. Look at this wick on this fat bar right here, and look at this wick on this fat bar right here, and this red selling bar, and right down here, all this selling pressure. And this is just after earnings too. So that was a very, 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 well, I shouldn't have said, I mean, it was a bad trade because I lost money, right? And I lost a lot of money. But my thesis was, I mean, based on the velocity, what was going on, my thesis was semi-right. I mean, I waited for this to like really turn around in this area here and to really like start to take a position because I just based on the volume, right? Just based on the volume down here, you can see the volume right here. You based on a lot of volatility, a lot of volume, just after earnings, you know, and it just went violent to the downside. It looked like it was going to be a short position, but it was one of these positions here, and as you can see, like it was violent out of the word get-go for like the first 5, 10, 15, 20 minutes, 25 minutes, like right down here, this area right here. But it wasn't to be because it rallied right through. So it rallied right through and it broke through the box, right? All this is resistance. Everything that you see here, this line here, that's resistance. It should have never penetrated, that trade should have never penetrated that resistance. That's like a thick cloud of resistance. Should have never penetrated it. And you know what? It did, and it busted through it. Earnings can go either way. 9 times out of 10, when I do earnings, it's a winning trade. This was the one time that it turned against me, and it wasn't a winning trade. I mean, of all the bank stocks that I picked, I could have picked other bank stocks. I had Bank of America on my watch list. I had Goldman Sachs on my watch list. I had JP Morgan on my watch list. I had UBS on my watch list. I mean, all, you know what I mean? They're all coming out with earnings. So, but I just thought Citi was going to be the best bang for the buck because of the way it just, I mean, all the pre-market here, this pre-market action, these big wicks down and up and down and up and down and up. Like these are big fat bars. Like this is going to be, it's one of two ways. It's either going to take off, or it's going to take off to the upside, or it's going to take off to the downside. But this is what happened, right? This was the majority of the day, right? Up until almost 3 o'clock, and then it kind of just finally just kind of broke out. After literally in a box, consolidating in a box back and forth, bouncing up and down in a range, and then just breaking out and just up to the upside. And finally, I had to pull the trigger, had to get out. So that was that trade. Let's come over here to QQQ. Well, let's bounce over here so that you see what I have over here. So the QQQ right here, this was the trade that after it hit the high, I said to myself right around this area right here, let's go to the 5-minute chart. Sorry. Let's go to the 5-minute chart so that you see it. So let's move this. So here was the mistake here. This hit the high of 366.73. So let me move over to the flexible grid so that you can see it. That's a little bit better for you. So this hit the high of 366.73. And you want to know where I took my position? Where I should have made money, and once again I got trapped, was this fat candle right here. So let's slide this over here so that you see it. So after it hit the high on this candle right here, you see what happens here. Selling pressure. You see a little kick out, right? So you think this, okay, this is going to consolidate. This is on the 5-minute chart, by the way. But this 5-minute candle right here of this selling pressure, this downward selling pressure, and look where it is. It's right on the 20. And then you look at the 200, it's right here. So this is signaling, this is going down. This is a short position. And as you can see here, the next candle, the next 5-minute candle right after it, look at that right there, right? So the signal went off, and this is like a spinning top. I guess you can call it a doji. It's a candle of indecision, but really it should have just went down, boom. And it kind of did, right? You can see the next 20 minutes right here of what's happening. A little staircase, little stair stepping down, little stair stepping down, but this was nothing. This is when I entered the trade. And this area right here, I should have got out right on this big fat short body candle right here with no wick. That's the candle I should have got out on, but I didn't. I decided to stay in the trade because I figured it would continue to go down, and my thesis was wrong because it eventually ripped and went back down over here, then a staircase up again, and it just ripped up to the upside, and that was a $580 loss. I cut my losses there really quickly because I already had a $2,000 loss on Citigroup. So I just said to myself, $2,100. Now I'm down another 500. You got to call it a day. You got to say to yourself, wow, $2,700 or $2,600 day in the red. I mean, in the grand scheme of things, it's one day, but it's still a day that just didn't want to have that red day. So this happens. I hope you learned from it. I violated my own rule, and I'm not going to do that again. I usually don't enter into trades. I usually wait for the first half an hour, first 15 to 30 minutes for everything to kind of shake out, like the market to kind of shake out, get rid of the dead orders, the stale orders, orders from yesterday. People are holding. They don't want to left whole in the bag. People want to take profit. So I usually don't trade. And that's the second rule of mine I violated today, which is getting into the trade too early, not letting the trade develop properly, not looking at all the other parameters. And the market was totally green today, and I was actually going against the trend. The entire market was green today, and as you can see here, I mean, it wasn't as green as it is now. Let's come on over here so that you see this. The entire market is absolutely green today, the entire market, right? And then you see little pockets here. You know, some of these banks, so let's come over here. we'll go over to the index watch so that you see this. We'll come over here by industry. We'll go over to financials. We'll go over to banks. You see here, the advanced decline for the banks is 367 to 117. Now, when I took my trade, it was less than that. It was like 300 to like 74. So I should have looked at that and said, I mean, some of the banks were down. Some of the banks had earnings that the market didn't really care about, and then some of them popped. Right? Some of these guys popped. 8% today. Who was that? That was Commercial National Finance, right? It was an 8% move. All right, that's big. That's huge. Yeah, but I didn't see that. That wasn't on. That wasn't on my earnings. So let's come over here to trade. Let's have a look at that. No options. See? So no options on this particular one. I mean, it's $11 stock. So let's go over and have a look at it. No movements today, really. Let's go to the 1 minute. And let's go to the 2-day. So, you know, not too much volume. Just a terrible trade overall. So, I hope you enjoyed this video. We learned from our mistakes. We learned from our losses. This was a loss today that probably was very avoidable. And look at Citigroup. It's still ripping, going up to the upside. That was a trade that I'm not going to get back, but I can learn from it. And I'm teaching you the lessons that I'm learning from it. So I hope you enjoyed this video. Again, you want to join our group? This is my first red day in a string of, I think, what? I don't even know. I made 20 days, first red day out of 20 days. It is what it is, right? So we learn from it, right? So somewhere in this link, it could be up here, it could be down there, it could be to the left, or it could be to the right, or sorry, it could be to the left, or it could be to the right. You can still join the Platinum Traders Beta Testers group. We're a phenomenal bunch of traders. You've seen it live in real time. We do have losses, right? We do have red days. I'm human like everybody else. I'm a human trader. It's what we do with the red days and how we learn from the red days that helps us not have them, or not have too many more of them. I don't plan to have another one of these for a very long time because they sting. They're not nice. It was a $2,500 day. That could have been a green day. It was a red day. So, and everything's mapped out. So sometimes, I mean, you can do everything right. You can do everything right and still you're going to be on the losing end of a trade, and it happens. So that being said, you can join our group. If you want to join our group, you should join our group. Like this video, smash the like button, subscribe, come over here to subscribe, and we'll see you next time. This is Double P over and out. Take care, everybody.